This is Ag Matters PM from the Iowa Agribusiness Radio Network, brought to you by the Iowa Soybean Association, your source for the latest Iowa ag news headlines right here in the heart of the heartland. With reports from our award-winning team of Dustin Hoffman, Riley Smith, Mark Magnuson, and Andy Peterson. Now, from the IARN studios in Des Moines, here's Riley.
Good day and welcome to Ag Matters PM on the Iowa Agribusiness Radio Network. I'm Riley Smith. Today is Friday, February 14th of 2025, and we are so glad you can join us for today's show. In today's episode, I talk with Ron Baumgarten. He is the former Deputy Assistant to the U.S. Trade Representative. We'll also have a check of the closing markets, but here first, I'll have that conversation with Ron. We talked about the tariffs put out by the Trump administration, how those can potentially impact Iowa farmers. We're here with Ron Baumgarten. He's the former Deputy Assistant of the U.S. Trade Representative and also now with Baker Hostetler Law Firm. Ron, thank you so much for taking the time to visit with us today. Obviously, a very busy time in the ag marketplace right now, lots of volatility. What's the current state of global ag trade?
Well, first of all, thanks for having me on here, Riley. I appreciate the invitation to talk about these important issues. Very timely, of course. Yeah, the global ag market right now, is in flux in the sense that we have a new president here who is very fond of tariffs. And so even if things were stabilizing in the markets, there's still a lot of unknowns out there. So I would say that right now, unpredictability is the watchword at this point as to what might happen with respect to ag exports from the U.S. specifically. And I know that, the U.S. ag industry has been through a lot the last couple of years, a lot of issues, increased costs, those types of things. So there are a lot of ifs here now that are involved with respect to what happens with the trade policies.
And of course, a big thing right now is the tariffs on China, Canada, and Mexico. The latter two having been paused for a month, and we're just a little bit into that now. Obviously, no guarantee that those tariffs will stay away, though, and obviously, if we get to the end of the month, they will come back. If those tariffs are all three in effect at the same time, what do we anticipate would be the impact on ag trade?
Well, that would be a very large impact. I mean, tens of billions of dollars probably at stake there. I mean, China already did implement the tariffs, and that was a 10% and up to 15% tariff. The tariffs there, though, were aimed at agricultural machinery. And so those are in place right now and already covering those products. Commodities were not involved with that or any type of, food products. So from that standpoint, ag is safe in China at the moment, unless there's retaliation or something along those lines that increases because the U.S. does something in return. But as of now, it's just 10% tariff on goods coming in from China. With Mexico and Canada, it's a different story. And with Canada, you probably have seen the orders in council, as it's called up there, of the list of products that would have been hit with the tariffs starting on February 4th, which has been postponed now. But it was a veritable listing of nearly every part of the harmonized tariff schedule involving agricultural products. There were also consumer products on there too, but Canada was aiming specifically at the ag sector in the United States. And I think it was something like, I'm trying to recall exactly how much trade was involved with this threat, but it was very high. And there's another slew of tariffs that were supposed to kick in something like 21 days after the original tranche kicked in. So that there's uncertainty what's going to happen. There was a deal in principle reached with Canada on the issues dealing with fentanyl that triggered the tariffs to begin with. On the Mexican side, we didn't have a lot of insights as to what Mexico was going to do in terms of tariffs, what sectors they were going to hit. And they also had said they might take non-tariff measures similar to what China did with its retaliation. But we don't know yet what they would do. But presumably they would hit ag. And, you probably are really familiar with this just from the last time around too, with the Trump trade wars part one. Ag is vulnerable because it is very competitive internationally. People want our products and they tend to want to hit us there. number one. And did used to have, surpluses in that area. I understand there's been, deficit issues the last few years, but we typically got hit there. And just because it's, a very strong sector for the U.S. economy in terms of exports, and also because it basically hits the key constituencies right now for the Republican Party and for Trump's voter base. Something like 64% went for President Trump in rural areas. So, it's sort of a double intended target.
And then, of course, too, you'd mentioned we've seen a lot about the consumer side of things on how that will come back there. There was a little bit of confusion, I think, initially when it came to the election cycle of how those tariffs would impact us back here in the States. Obviously, those consumers having to pay those prices from the increases on the tariffs. When it comes to the average American farmer as well, what are the additional impacts that come back in effect and impact them?
Right. There are a lot of different ones. And, a lot of times the supply chain is pretty spread out, right? In terms of if you have smaller farmers feeding into the producers or what have you, or you have, stockyard owners or cattle feeding operations or whatever. And they're going to be faced with a few things. On the import side, too, they might be affected. I know that the American Farm Bureau was very concerned about potash and any type of impact that would happen on fertilizers. And Senator Grassley as well had raised that issue. I think earlier this week, when he was talking to the Ag Secretary nominee at the hearing, that he was concerned about the impact on input costs for U.S. farmers. So that's something that can't be forgotten either. So there's a cost squeeze in that sense. And then what might happen is there's retaliation that affects products that are exported from the U.S. And so there could be a fall off in demand there. They initially, and leading to a drop in revenues in that sense. And longer term, not to be forgotten, is the fact that other countries will rush in to fill the gap. So that's what happened in China the last time, when you had billions of dollars, worth of soybean trade, and China took retaliatory steps against soybeans, and you had Brazil sweep in there with its soybeans, and Argentina to a lesser degree. So there's a longer term consequence of losing share. Now, something that farmers got the last time, and Brooke Rollins raised that in her confirmation hearing this week, is support, payment support, outside the normal farm programs and crop insurance, but actual payment support to farmers who are impacted by the retaliatory tariffs. That happened the last time. And it's promised again, although I understand that, the funding comes from what's called the Commodity Credit Corporation, CCC, and that money was taken from there, but there's not a lot left in there. And so, more money would have to be appropriated for that purpose. But the administration's aware, and, Brooke Rollins seems to be pretty close to Trump, so I would have his ear on that issue.
That again was Ron Baumgarten. He's the former deputy assistant to the U.S. Trade Representative. We'll take a look at the closing markets next, but first, here's a word from our sponsor, the Iowa Soybean Association and the Soy Checkoff. This is Ag Matters PM.
Iowa Soybean Association is driven to deliver for Iowa's 40,000 soybean farmers. We're proud to provide objective agronomic research, a helping hand with soil and water stewardship, and timely industry news powered by the Soybean Checkoff. Learn more at iasoybeans.com.
It's time now for the Ag Matters PM Closing Market Summary, your source for market analysis and settlement prices from the day's trade in Chicago, courtesy of the folks at agmarket.net.
Welcome back to Ag Matters PM on the Iowa Agribusiness Radio Network, and we're here now with Ross Baldwin of agmarket.net to take a look at the closing markets for today. Ross, what do we see in the grain markets?
We're ending the week on a stronger note here for the today anyways. March corn's been trading 3 cents higher for going into the settle. We actually made a new high for the move on corn here, and March got up to 4.99 3/4 before it did pull back a little bit, and we ended up settling at 4.96 1/4. But all in all, I mean, it was a firmer week of trade across the grain markets. Corn was around 8 cents higher on the week. Over in the bean market, beans are ending the day about 6 to 7 cents higher. That is about 10 cents off their high that they made here earlier this morning, but settled today right around 10.36. For the week, beans are still a little bit lower on the week, around 8 to 10 cents lower. The big story though today, or the big market move, was in the wheat market. Chicago wheat ended the day about 23 cents higher, settled right at $6 here on the day. And for the week, wheat is ending, we're about 16, 17 cents higher on the week. And a lot of today's move in the wheat market's more so driven by the cold snap, not only in the central plains here in the U.S., but also over in Russia, and the impacts that they might have on their wheat crop.
And then I know throughout this week we were thinking, okay, we've got the WASDE report, export sales coming out as well, that there might be some market movers, but with both of those reports having come and gone, really wasn't too much reaction to that, right?
Not a ton, and a lot of times the February WASDE's not a huge market mover, but we did see some changes in that report. The world carry out for corn, beans, and wheat all did get lowered. The big change for the bean market was the USDA lowering Argentina's bean production, which is driven off the hot and dry weather that they've had. So not a huge surprise there. They did leave the Brazil crop unchanged. So you still have people thinking that maybe that Brazil crop eventually could get a little bit bigger. But I mean, for the time being, it was good to see the adjustment into the Argentina bean number. And I'm not going to sit here and say that the bean market's got this bullish story here, because it doesn't. I mean, the world's still got plenty of beans, but it's certainly a lot less burdensome than what it had been over the last several months, as we've seen both now the U.S. ending stocks get quite a bit lower, and we've seen Argentina start to trend a little bit lower too from the weather problems they've had.
And then over in the livestock markets, how did cattle and hogs trade today?
Cattle had a lower day of trade. Actually, we've really just been a choppy, volatile week of trading. I mean, a lot of just back and forth action, but we ended the week. I mean, today, April live cattle were 227 lower, settled at 194 and a quarter. For the week, February live cattle are about $3 lower. And so we continue to see cattle finding quite a bit of pressure, and really, even when they've had some rallies here, we've seen the funds just step in and sell these rallies. Over in the feeder cattle market, feeders were anywhere from $1.20 to $1.60 lower here today, but on the week, feeders were actually about $1 to $1.50 higher. But they had that big day of trade yesterday where they were $2 to $3 higher, so that helped them on the week versus live cattle. But the thing with the cattle market is we're coming off these elevated prices that we've been at, and the funds have been, coming off this record size long position that they've been holding here for quite a while. So it's not a huge shock, just kind of given how the momentum's really slowed down here and it's been running out of steam, that you're seeing the funds more into the camp of selling rallies. And for right now, going home, I mean, April live cattle actually closed below some trend line support, which was around 194.50. And that trend line supports off of our September lows. So I think there is some concerning things to keep in mind as we start next week's trade on Tuesday across the cattle markets. And a lot of it is just, I mean, over the last few months, everywhere you looked, the news was all bullish. I mean, it seemed like the only thing that you could find bearish was everything was so bullish. And now it's kind of that snowball's been changing to where there's more negative news out here. And we've seen that play out into the futures market as the funds have been covering this long position. And we're seeing it spill over into the cash side of things. Cash trade's been lower. I mean, this week we were another $2-3, even some cases maybe $4 lower for a cash trade. The cutout market's been under quite a bit of pressure. Feeder cattle index has been under pressure as well, and a lot of that's been driven off the southern trade. I mean, where the Mexican border opened back up for those feeder imports, and the packers have really pulled the reins in on how many cattle that they've been killing here recently. This week's estimate actually came in quite a bit lower than what the guesses were for the week, and it was a 561,000 head slaughter for the week is what the guesses are. We'll have to see if that holds true on next week, which I have no reason to think it won't. But if the packers really start killing that many less cattle, they don't have to get nearly as aggressive. And so there's just some concerning things to to keep in mind for the cattle market is while the fundamentals, the numbers are tight, we all know that the near-term fundamentals are kind of having a little bit of a negative shift here, and we're seeing that play out into the markets.
All right, Ross, lots of great information today. For anyone who would like to get in touch with agmarket.net and talk marketing strategies, how can they do that?
You can reach me at our office here in Anthony. Our number is 712-373-3276, or you can visit agmarket.net to find any of the ag market brokers.
All right, Ross, thanks again for your analysis as always, and we look forward to talking again soon.
Thanks for having me.
All right. Thanks again to the folks at agmarket.net for joining us every day for the closing market analysis. Let's take a look now at how those numbers close through the market window at iowaagnet.com.
March corn up 2 3/4 at $4.96 1/4. March soybeans up 6 even at $10.36 even. March soybean meal up 3.20 at $2.95.90. Soybean oil down 18 cents at $46.07. Chicago wheat up 22 1/4 at $6 even. Kansas City hard red wheat up 23 even at $6.21 1/4. Minneapolis spring wheat up 17 1/4 at $6.34 even. March oats up 5 3/4 at $3.37 1/2. On the Merc, February live cattle down $1.80 at $197.75. March feeders down $1.62 at $266.35. April lean hogs down 50 cents at $92.60. Pork cutout went unchanged at $96.10. And February class 3 milk up 2 cents at $20.34.
And that's been a check of the markets here on Ag Matters PM. That also brings us to the end of today's episode. You can find all of our content on our website at iowaagnet.com. Also follow us on social media at Facebook, X, LinkedIn, and TikTok. Find our video content as well as previous episodes of AM/PM on our YouTube channel. Make sure you subscribe and hit the notification bell to see when those videos go live. Don't forget as well our free morning, midday, and closing market podcasts, as well as the Iowa Ag Matters podcast and Pods of Potential. You can find those on your favorite podcasting services at Apple, Amazon, Spotify, and Podbean. And once again, under the podcast tab on our website at iowaagnet.com. From the Iowa Agribusiness Radio Network studios in Des Moines, I'm Riley Smith. On behalf of Mark Magnuson, Andy Peterson, and Dustin Huffman, we thank you for watching. This has been Ag Matters PM.